How to find high market cap stock to sell credit spread, put credit spread tutorial. This is what we're doing today, but our focus will be on a high market cap like the Google, Apple, Amazon, Tesla, Nvidia, etc., etc. So in order to do so, we are going to Market Chameleon 7 days trial, and we assume that market is at all-time high. Fed cut rate yesterday. Everything is going up, everything is good. So you are bullish. This is a bullish strategy, but you still have some cushion in case things go wrong, things go down. You can still make money with the credit put spread. So just so you know, a credit put spread, basically, let's read about it so you know what's up. In order to do so, you're gonna basically, let me tell you in 1 second. If you scroll down on the filter, on the credit put spread filter, this is a new not new feature, just something I haven't noticed until now. Again, Market Chameleon, every day you find insane new stuff and just explore non-stop. So it tells you how much can a credit put spread return. Many people don't realize that credit put spreads can yield very high return in a short period of time. It's not uncommon to see a return of 20 to 30% within 2 to 3 weeks time period if the stocks such as Apple, Microsoft, ETFs like SPY. Of course, there's risk to capital. Option spread, the risk is defined. Yeah, there's a defined risk, how much you can lose and how much you can make. Just for comparison, just think of a junk bond. Junk bond usually requires investor high yield because of their low rating and high risk. Would you rather buy junk bond for 1 year or sell out of the money bull put spread for 2 weeks on a top-notch stock? This is actually a pretty insane good stuff, good information. The range of return varies from one credit put spread to another, but first you must understand how to properly find the return on the spread that you are selling. Let's take a look at the screenshot below. So basically it gives you like an example on Apple, 310 stock, $310 price. This was like pre-splits and all that. And it tells you right here, and it tells the put credit spread tells you to sell basically the 305 right here and buy the 300 put. Sell the 305 put, buy the 300 put. Again, we are assuming that the all-time high will continue. So if Apple goes up, you have 3 ways to win. For this specific example, even though Apple is different price now, but the concept is the same with the put credit spread. So if the price goes up, you win because you need to go below 305. Price stays 310, you win. Price goes up to 305.01, you are wrong, but you still win. 3 ways to win, and you're collecting $160 in this example compared to $98, which is what you should have collected based on history. This is the edge. This is why Market Chameleon, this is what the beautiful thing of them. You make extra 18% edge, so you collect, look at this, $60 more than what you should have collected based on history. 79% historical win rate, as long as Apple stays above 305 in this example. And the return, if stock is flat, 47%, you have 2.2% cushion to be wrong. And you feel free to read all about it. I'm not gonna do it, but this is pretty awesome. You just scroll down on the put credit spread screener and you see all the frequently asked questions. Pretty awesome. Let's do a disclaimer and then go over and look for high market cap stock. So this is not a financial advice. I'm not a financial advisor. This is for entertainment and education purposes only. And my name is Ziv, also known as Finance After 40. Now, if you're not a member just yet, 7 days of Market Chameleon free trial. Link below in the description. Okay, so we are in here. How to get here? You're gonna go to screener, okay, and you're gonna click bull put spreads right here. Bull put spreads, it will open the default right here. Now in the default, and again, in order to get to all the questions and read about it, you click here, see frequently asked questions. But I want to focus today on finding put credit spread on a high market cap stocks only. So I'm gonna click here, Market Chameleon presets. They have a lot of presets, a lot of stocks. So let's see what we got for this. We got best return if flat. I'm looking for, this is something good, market leaders plus positive theoretical edge. Let's see if there's anything else. With market leaders, technical uptrend, ETF is also good, but it's not for specific stocks. Mid large cap, mid to large cap, this is interesting, with positive edge and a downside cushion. Okay, so there's two options to do this. You can go on the mid large cap, positive edge, downside cushion, or let's start with the first one, with the market leaders and positive theoretical edge. Market leaders are all the Apple, Nvidia, and all the ones that we know. Positive theoretical edge means, as you saw in the example, you're collecting, for example, $150, but based on history, you should have collected $100. You have a positive theoretical edge. You make more income. Thus, in the long term, if you play enough times, the odds are in your favor. So let's click here, market leaders, positive theoretical edge, and let's see how many pages we have. Well, just one page, short and simple. And we got, look at this, the market leaders. That's what we're looking for. We're not looking for anything else. Apple, Microsoft, Google, Amazon, Meta, Berkshire, Avago, Tesla, Walmart, JP Morgan, United Health, Coca-Cola, Texas Instrument, and Goldman Sachs. Beautiful, beautiful list. Now let's see the filter that Market Chameleon gave us. The next 30 days, the put credit spread will expire in the next 30 days. Maximum spread 5. Return if stock is flat. Look at this, above 15%. Above 15% yield on your money. That means that you're risking, for example, just for the example, understand what it means. You're risking $100. That's your max loss. If everything goes wrong in the specific trade, you're losing $100. But if you don't, your return is at least $15. So 15 divided by 100, 15%. I'll show you examples, but this is a great filter to use, not a financial advice. All the rest is any theoretical edge above 10% is actually very good. That means that you are collecting more income than what you should have based on history. Theoretical win rate based on history above 60%, and show best return by theoretical edge by symbol. So while we have all those great high cap market stocks, I'm gonna filter by a couple of things. Let's start with the theoretical edge. So you're gonna click here twice, and that means I'm just filtering to collect as much income as possible based on what I should have collected in the past. That the higher the edge, the more income you collect than what you should have collected based on history numbers. So we got JP Morgan. I'm okay with that, 600 billion market cap. Look at this. What's the price today? 210. Okay, but look at this put spread. We're gonna go back to this in a minute, but it tells you right now, sell the 210. Okay, I'm not gonna do that because we're below the 210. We need to go a little bit above it. So that's why, I mean, if stocks goes down, I don't like that. I want stock that's already in the money. Remember Meta? We did Meta a few days ago, like 515 put credit spread. We're already at 557. I think it was like 515, 520, something like that. Check, but it will expire worthless. That's basically, I think it's for tomorrow, for the September. Go watch my other videos. That was a beautiful trade. Will expire worthless. Let's see what we got now. 557, 1.4 trillion Meta. 31% edge. Okay, we're gonna go back to those numbers, but it tells you to sell the 555 and buy the 550. Look at this, assuming you are bullish. Again, put credit spread, you are bullish and you assume things will keep going higher, stay the same, or go down a little bit up to your sell strike price. But look at this, theoretical edge 31.6%. Okay, and it tells you are collecting, look at this, $185 collected compared to 85. This is a beautiful thing. Collect 185, that's extra $100. That's more than double the income than what you should have collected based on history. You can't do it randomly on Robinhood. This is where Market Chameleon scan all day long and find you those trade opportunities. For the income alone, you collect extra $100. That's a monthly worth of Market Chameleon subscription. That's crazy. You got 81.8% historical win rate. As long as Meta stays above 555 by expiration on October 11, you still have 0.8% cushion to the downside. And if nothing happens, look at this. If Meta stays the same, you are making in about 3 weeks 58.7% return on your money. So if they stay the same or go up or go down just up to 555, almost 60% yield in like 3 weeks. That is absolutely crazy. Avego, let's see what we got here. I'm looking for something that has so you can go by this, you can go by theoretical edge to get the more money compare to what you should have collected in the past. But you can also, let's click here twice. If you click twice on win rate, then you go by win rate. That means you have more downside cushion and all that stuff. So let's just check the first two. Texas Instrument, okay, 180 billion market cap, price 209. Interesting. And it tells you, look at this, it tells you for October 11, sell the 200. Okay, we are at 209. You got $9 cushion. And buy the 195. Interesting, 95.7% historical win rate. Collect $71. Look at this, compared to 22. Almost 4 times more than what you should have collected based on history. This is absolutely crazy. Collect $70 compared to 22, 11.5% edge. I think it's higher, I don't know. 95.7% win rate. And you got, look at this, downside cushion almost 5%. The Texas Instrument, you could be wrong. If the market could be wrong, you can still go down 4.8%. And you still break even, and if nothing happens, you made 16% in 3 weeks. Beautiful trade as long as it happens. Let's check the other one, United Health Group. This is a big, you need like $50,000 to own 100 shares, control 100 shares. Price 578, look at this. And you sell the 560 put, and you buy the 555 put, also for October 11, the weekly. We are almost at 580. You need to go to 560 to just break even. And for this thing, you are collecting $85 compared to $45. That's double the price of the income. 10% theoretical edge, 91.3% historical win rate. You got 3.3% downside cushion for United Health Group to go down. And if nothing happens, you made 20% yield on your money. Beautiful stuff, non-stop, beautiful stuff. And of course, you can go over all those. You got the Tesla, the Amazon, and yeah, and you just filter by high market cap, which is what we did here. Market leaders, I think maybe other videos we can do mid-large cap to keep going, and also ETFs people like, just to stay on the safe side. But this is pretty cool. One page, take your pick, not a financial advice. Market Chameleon 7 days trial, link below. I'll see you next time. Yeah.